Virtually all commercial banks are moving their prime lending rates downwards, effective 1st April, in a move specifically seen as aimed at enticing new and old borrowers.
Of course, we hope that interest rates or cost of money continues to come down. We know that we must work at our costs of operations. We know that we must ensure that we give out money to people who are able to pay back in time. If those things happen, we should continue to see these rates come down.
Stanbic Bank has since moved from 20% to 19.5%. Housing Finance Bank is at 19.5%. DFCU Bank at 21% from 22%. Diamond Trust Bank at 22.5% from 24%. Standard Chartered Bank at 21%. And Tropical Bank at 22.5% from 23.5%.
But it comes at a time when they have already lost their businesses, when they have lost their collateral, when they have lost almost everything. And now some of them have already gone into receivership. And then if there is a relief, then it is maybe for the upcoming businessmen or new entrepreneurs.
And as the regulator remains keen to spur private sector credit with the central bank rate at 11.5%, the business fraternity insists that consensus on lending rates already failed.
We had predicted in 2024, and we had advised banks not to extend all the loans, that is in new interest rate, on already existing loans. Because our prediction was banks would make a lot of profits in the short run, but in the medium term, then most of them non-performing loans would accumulate, and in the long run, businesses would collapse. But at the end of the day, even the collateral would lose value.
The lenders under their umbrella, the Uganda Bankers Association, maintain that the 20 trillion shilling financial industry still expects frugality from borrowers in order to thrive.
As we've always said, there has to be discipline. Money can be availed by banks. That doesn't mean that you must just borrow for the sake of it. You ought to have a viable project. You ought to have analyzed the risk profile of your venture, such that once you borrow that money, that venture or that enterprise, you will be in a position to make money enough to repay the loans and also, get profits for the enterprise.
The downward shift in interest rates comes barely a year after massive non-performing loans rocked the market, hitting approximately 1 trillion shillings. Reina Ojon, NTV Business.